Happy Wednesday, traders. It's September 29th, 2021, and we're going to dip our toes into the pharmaceuticals companies here with Merk, which is a native New Jersey company here. And we've got a liquidity rank of 4 out of 4, but what's nice is its IV rank. You should know that earnings are coming up at the end of October, and this trade will take us very close to that earnings date. I wouldn't expect a volatility crush on a trade like this. Especially when you look at the charts, I mean, it has been pretty even keel. So why don't we take a look at those charts right now, shall we? Hi, everybody. My name is Neil. This is Option Theory, and you can see we are looking at Merck's charts right now inside of Thinkorswim's simulated trading. Thank you so much for joining us. Do hope you'll stick around to the end. That does help me with my little YouTube adventure here. And speaking of adventures, let's get into trading. So we can see here that we are looking at the chart. We can see we're near that middle Bollinger Band there. The play that we're looking at that was sent to us from Tasty Trade, and I'll help you get those emails too if you stick around, was a strangle. Now, many of you, maybe you're like me, are not a big fan of strangles due to that upside risk that's unlimited, right? A little scary. Not that it looks like this guy spikes up all that often. The biggest jump looks like it was right here. So, I mean, if you had gotten into a strangle there, you might have cried a little bit, right? So, how can we try both out and test both theories and see what happens with no risk? That's right. You use simulated trading. That's what we're going to do here. Hopefully you'll join us and give these trades a try. So we're going to give you an alternative at the end. Let's start off with the trade as sent to us from Tasty Trade. Go to the Analyze tab, go to Add Simulated Trade. We're going to be in the October weeklies, October 22nd, with 23 days left to expiration. I'm going to pull, actually I'm going to twirl that open. And then we're going to go to the At the Money section here, and we're going to be buying, we're doing a strangle. There's no buying here. There's just going to be selling. Selling the 77. Now I've clicked on that bid for the 77, and I'm going to scroll up, find the 69 put, and I'm going to hold down the control key and click on the bid for the 69 put. That builds me a strangle here, a short strangle that's 97 cents in credit. So there you go, you can make $100. That's not big profits to many of you that are looking for your lottery tickets. Sorry, that's not what we're doing here in this channel. We're not doing the low probability, high profit trades. We're looking at the low profit, high probability trades. Now this one just also happens to come with high risk, but we'll take a look at an alternative that gives us similar profit potential, similar probabilities, not as good, but similar probabilities without that unlimited upside risk. I think you know where I'm going with this one. So let's go ahead and right-click this trade. Nope, not going to right-click. We're going to take a look at the risk profile to understand our probabilities. And I think this is where we're looking. Yep, let's spread that out a smidge. This is the classic strangle. Let's go ahead and set our slices to break even. So now we've got our goalposts. We are slightly bearish on this one. There's a little bit of a negative delta here. But we have a 65% probability of ending up in between the goalposts at expiration. Or, even better, I think it's a near 86% probability of taking off half of this. So we could take off, let's call it $50 in the next 23 days. So that's pretty good. Now, that is something we're going to go and right click, choose confirm and send. We're not going to put that in our IRA because we can't see illegal. So we're going to go ahead and put that in the margin account, and that works just fine. But what if you have an IRA account? Or what if you just don't like that undefined upside risk that was all the way on the right side? You could just keep losing. Well, you have a couple options. But I'm in favor of the jade lizard on this one. So let's go, we're in the margin. Let's go back to the IRA, add simulated trade. And what we'll do here is we'll build out a short call vertical where we're going to sell the 76. And I'm going to hold down the control key and buy the 77. So that gives us a credit for just the call spread of 20 cents, right? 21 cents. Now all I have to do is look for a put that's going to give me enough to equal the width of this call spread. The width of the call spread is $1. So if I go, all right, 20 plus 80, that's $1.01, right? That's going to give me enough to make it so that I have zero risk to the upside. So I'm going to hold down the control key and click on this 71 put. And now I'm going to have what they're calling a custom here, a credit of $1.08. Let's take a look at this risk profile here. You can see now that instead of having unlimited risk to the upside, we have zero risk to the upside. So let's take our price slices, set them to break even. And now we've got a 73% probability of profiting at expiration. And of course, it's still somewhat neutral. We'd like it to stay in the sweet spot where we can make $108 rather than the 97, right? And yes, if it blows through the top, all we're going to make is $8. But boy, that's better than losing after a certain point, right? So hopefully you like this trade. I wonder what your thoughts are on these two trades, what your preference is. And I say, do them both. And if they move against you, awesome. Learn. Let's see how you can manage. All right, let's go ahead and right-click this trade, choose confirm and send. Let's allow you to see this here. Then instead of having an infinite maximum loss, the only risk you have is to the downside if Merk went out of business. Okay, which it hasn't done in a long time, so I think there's a little less to worry about there. Okay, so with that, I'm going to go ahead and throw that into my working orders and go back to full screen. Talk briefly about yesterday's trade in the margin account. We did a trade yesterday in the Qs, and that worked out well for us. I was able to open and close that trade all in one day. Thank you, lunch break. And yeah, made $75 in a day. I'll take that. So how'd you do in your trade yesterday? I didn't hear from, I only heard from one of you in the comments. So I'm glad to see that it worked out for at least one of you. All right. I said stick around to the end so you could learn how to get those emails from Tasty Trade with trade ideas 4 days a week. It's in the description. There's a bit.ly link. Go click it. Takes you right over to Tasty Trade's page. The only reason it's a bit.ly link is I like to see if it gets clicked every once in a blue moon. Some of the people that find me in the YouTube search will click that link. So I hope you do too. Get those emails. I don't get anything from them. I don't get your email, but you do get emails from Tasty Trades. They're not spammy. Monday's motivational. Tuesday through Friday, if they're normal trading week, you'll get trade ideas. We're just putting them on in a simulated trading account to practice our skills. Will you join us? Hopefully you will. Hit that subscribe button. Big thumbs up to you. If you think I've earned one, there is a thumbs up for you down there too, for me to hit for me. I do appreciate all your views, your likes, and when you share it with others. So until I see you tomorrow, friends, may the market be with you.